If you're thinking about buying a home right now, you've probably got this question in repeat in your head. What's going on with interest rates? Should I wait for 2026? What should I do? We're filming this mid-December in 2025, and this year has honestly been one of the most confusing, most emotionally draining markets buyers have ever had to negotiate with or to navigate.
We're Mark and Lorraine from Team Prada Real Estate. And in this video, we're going to unpack what actually happened with interest rates in 2025, how that shaped the market for buyers, and how we're positioning our clients going into 2026. We'll talk about what the Bank of Canada just did, what could happen at the next announcement on January 28th, 2026, and why we believe we're past the true bottom and heading into a slow, healthier growth cycle instead of another 2021 style frenzy.
Let's go into where we are today. As of December 10th, 2025, there was a rate announcement. The Bank of Canada is holding the overnight interest rate at 2.25%. That's after a series of small cuts throughout all of 2025, coming down from around 3% at the start of the year. But it's still much higher than the ultra cheap 1.5 to 2% money people were locking in during the 2020 and 2021 time. That chapter is closed for now.
The important part is this. The market has already adjusted to this interest rate environment. Prices had to correct after that 2021 peak, and they did. Activity slowed, sellers reset their expectations, and the Bank of Canada has now signaled that 2.25% is about the right level and where inflation and the economy are today. We're not in a free fall. We're in an adjustment phase.
And in real terms, what we saw in 2025 in areas like Durham region, Cobourg, Trent Hills, and throughout all of Northumberland was a market that felt tough, but also more rational. Fewer wild bidding wars, more conditions, more opportunities for patient buyers to negotiate. Sellers who really needed to move had to price properly and or be prepared to sit for a while. It wasn't fun for anyone, to be honest. But it did squeeze out a lot of the speculation and emotion that drove the 2021 madness.
Now everyone's eyes are on the 2026 market. The next scheduled Bank of Canada rate announcement is January 28th of 2026, and that date is already circled on a lot of calendars. Some people are convinced they're cutting again, and then everything will take off. Others think we'll see a long pause with rates held where they are. The reality, nobody knows for sure. The bank itself and most major forecasts right now are leaning toward holding at 2.25% for a while, unless something big changes in the data.
So, what does this actually mean for you as a buyer? First, it means the window where we are right now, this late 2025 to early 2026 phase, is a period where you can still shop in a calmer market, more balanced market. Prices have come off the peak. Competition is reasonable, sellers are now listening, and they're not trying to buy a house with 20 people lined up out the door throwing money all the way around it.
At the same time, we're starting to see the early signs of what we'd call the next cycle. We're moving through the tail end of those COVID-era mortgage renewals where people who locked in at rock bottom rates in 2020 and 2021 are now facing today's higher rates. That's created some stress, some forced sales, and some caution. But it's also flushing a lot of that instability out of the system. As we move through 2026, we expect things to feel more stable. Fewer shock renewals, fewer surprise defaults, and a market that can grow at a more normal pace again.
Our view, and we're saying this very clearly as our opinion, not a guarantee, is that the true bottom of this correction is either behind us or we're pretty darn close. We're not calling for a rocket ship market. We're expecting slow, steady growth from 2026 through to probably about 2028 in our professional experience. It's not going to be major, exciting headline stuff, but healthy, sustainable appreciation. The people waiting for a dramatic crash are probably going to be very disappointed.
And if you're sitting there thinking, I'm just going to wait until prices go back to 2021 levels, we need to be honest with you. That spike was an anomaly driven by emergency level rates, lockdown behavior, and a surge of demand, all at once. Based on normal long-term growth patterns, if you're waiting for that exact combination of prices and rates to return, you might be waiting a decade or more. It's not that play. The play is to buy a good home at a fair price that fits your life and your budget in this new normal, not a fantasy version of 2021.
Let's talk numbers for a second, because this is where buyers either calm down or panic. Yes, a 2.25% overnight rate still translates into a higher mortgage rate than people got in 2020 or 2021. But you're not buying at 2021 prices. In many pockets, especially outside the absolute hottest neighborhoods, we're seeing more reasonable purchase prices, more room to negotiate, more flexibility on conditions. And when you run the full math, the price you pay, your down payment, your rate today, and the realistic possibility of renewing into a similar or slightly lower rate in a few years. The picture is often far less scary than the headlines. They always say, when in doubt, zoom out.
We're spending a lot of time this winter sitting down with buyers and literally modeling scenarios. What if rates stay around here for 5 years? What if they drop a bit in 2027 or 2028 and you renew into something lower? What if your income grows modestly over that same period? When you lay it all out on paper, most people realize that the real risk isn't buying now at the wrong time. It's freezing for 3 years and missing a steady climb while still paying rent or living in a place that doesn't actually work for their family.
The other piece you have to think about for 2026 is demand. If the Bank of Canada even hints at future cuts, or if fixed rates drift down because of the changes in the bond market, a lot of people who've been sitting on the sidelines are going to jump back in at the same time. We saw a version of that in the previous cycle. The buyers who quietly bought 6 months earlier when things felt a little bit meh ended up looking very smart. The ones who waited for confirmation had it completely harder and a much different experience.
And that's why we keep coming back to this idea: marry the house, date the rate. The price you pay for a home is long-term. The interest rate you can carry is a snapshot in time. You can refinance, you can change terms, you can restructure. What you can't do is go back in time and buy that home in a calmer market once everyone else has decided it's safe again. If you can afford the payments today, if the home and location are right, and if you're planning to hold for the long term, you don't need the rate to be perfect. You need the plan to be solid.
Going into 2026, we're also watching a few big themes. Wage growth, slowly catching up, that's a huge one. It's always more important to look at everything at the large economic picture rather than the macro market. So if we're seeing wage growth catching up, immigration is still supporting housing demand, and more people are shifting to that hybrid remote work scenario, which keeps areas like Northumberland, Cobourg, Trent Hills very attractive. All of the points that are happening here point exactly to what we're telling our clients. Not a crash, not a frenzy, but a slow firming up as the market is returning back confidently.
So what should you do right now, sitting here in December 2025 or early 2026, trying to make sense of all of this? First, get clear on your personal numbers, not what your friend at work is doing, not what the news is saying, your income, your savings, your monthly comfort zone. Second, get pre-approved with someone who understands this rate environment and can show you different strategies, like shorter terms or variable versus fixed, in a way that matches your risk tolerance. And third, sit down with a local agent who actually knows these markets. Durham, Northumberland, Trent Hills, Cobourg, Oshawa, Whitby, and talk about where you like to get the most value for your budget.
If after that you decide the smartest move is to wait, at least you'll be waiting with a plan, and that is the most important. You're not waiting out of fear. And if you decide the numbers work and the lifestyle upside is real, then you'll enter 2026 ready to take advantage of this window. Instead of watching it pass by, the worst place to be is in limbo. Doom scrolling, rate headlines, but never actually running your own real scenario for yourself.
We truly believe the next 3 years, from 2026 to around 2028, are going to reward buyers who are thoughtful, calm, and strategic, not the ones trying to time the absolute bottom or the absolute top. This is the time to think like an adult investor, not a panicked speculator. You don't need to nail the exact month the market turns, you just need to get close, buy well, and give it time.
If you're feeling stuck, overwhelmed, or just unsure of how these rates are gonna move or translate into your real life, don't ask your friends. What you should do is exactly why we make these videos. Do some research. Reach out to somebody, a local advisor. We'd be happy to help you, walk you through the steps. We work with many trusted mortgage specialists. We work with different banks, and we know these markets. If you're interested in Durham region, Northumberland County, we'll walk you through the numbers. We'll walk you through your timing, your options, and help you build a strategy that feels smart and realistic, not driven by fear or FOMO.
We're Mark and Lorraine Prada from Team Prada Real Estate, and we'd love to help you write your next chapter.
Don't forget to subscribe and like our channel, hit that like button, and watch all of our videos moving into Northumberland County, Trent Hills, Durham region, or anywhere within those means.